What we look at is how can we help these real estate investors? Just want to be able to provide another source of financing for them.
What factors do you consider when deciding whether to fund a real estate deal or not?
We're looking at the property. What is it worth now? What is it going to be worth in the future if you're doing renovations? At the end of the day, we're doing a loan on the property. Everything we do is stated income, so we're not going to actually verify any of that stuff. We want a copy of your ID, your entity documents, and a purchase contract, and if you're doing renovations, a rehab budget, but that's it.
Welcome to another episode of Business Perfect Formula. I'm your host, Sarah, and today we have an amazing episode for you. I know so many of you have dabbled in the world of real estate investing and you've thought about it. Maybe you're already doing it, but you're just feeling a little bit confused over all the options out there, especially when it comes to funding. As many of you know, I work entirely with private lenders, but up until now, we've never had the privilege of actually having a real, true private lender here on the podcast. Today, that's going to change. I have Justin Siegel from CV3 Financial Services, one of the private lenders that I work with when I'm funding clients here at Trufinco, and he is an amazing human being, a wealth of knowledge, and I am just so excited for him to enlighten you on the world of private lending and just how beneficial it is for real estate investors. So without further ado, Justin, welcome to the show.
Thank you so much, Sarah. I am honored to be here. I'm excited to be a part of the podcast, and I hope to bring some knowledge and experience to this conversation to help enlighten and teach and tell everybody what this is all about. So thank you for having me.
Absolutely. I'm really excited. I feel like I'm pulling back the curtains by bringing you on and showing people the wizard, just because I get asked about private lenders all the time and do they really exist? So we're putting a face to the name. So it's very exciting. And I'd love to dive in. I'm going to get into your background, but I think first and foremost, I'd love to hear from you. What is private lending and how does it differ from your traditional bank lending?
It's a great question, and really private lending is just another source of financing. It's another option or opportunity for a borrower, for an investor to get money. But unlike traditional banks that are backed by the bank, oftentimes private lending is backed by different groups, different people. And so there's a notion or thought that oftentimes private lending is kind of just done where you call somebody up and you ask them for money and they give you money and then you go ahead and do the deal. And that's really not the case at all in our situation. And most of the private lenders, you will have those true privates. But what we do is we are capitally backed. We're asset-based lenders. And what we look at is how can we help these real estate investors, right? We're an asset-based lender and we look at the property and we just want to be able to provide another source of financing for them outside of what the traditional banks do and provide for other borrowers.
So let me get this straight and make sure I understand it. You guys actually want to help investors. You actually want to.
That's all we want to do is help investors. We work with first-time investors, people who have no experience. And for us, it's an opportunity to get in with them on their adventure and see their portfolio grow. And at the same time, we work with investors who have done 100, 200, 1,000 different properties or types of investments over the years. But we welcome everybody. And our goal is really to help them be successful.
That's awesome. And that's one big piece, I will be honest. And no shame on banks, they have a purpose, but I often feel like they're not out there to help you or help investors. It often feels like they're looking at, okay, how can I find a way to not make this work? How can I make this as hard as possible? And, from my experience, I think we've been helping real estate investors now for 3 years. What I find so different is private lenders, they focus on what matters, what's important, which is the property itself, instead of your personal taxes, and you make the process so much easier. I mean, it's just dramatic, the difference. Absolutely. So I'm really excited today to kind of dive into that and just enlighten people and just show them they all need to come into our world, Justin. They all need to work with private lenders because it's a better place. Absolutely.
Yeah, a lot to educate on for sure.
So to kind of dive into you a little bit. What prompted you to, join and be a part of CV3 Financial and be part of the private lending world because it is a unique world, but love to hear your story a little bit.
It is. Thank you. Yeah, and it's a fun journey, at least for me. Dating back to what seems like a past lifetime of mine, I used to play baseball and thought that was my future, and for a long time it was a part of my career. After that world, I dove into being an entrepreneur, and I had
Mm.
a few different health food cafes that were successful. Ended up, exiting that business. And a friend of mine who actually became my boss used to work in private lending, or still does. And the long and short of it is we were connected. I ended up becoming a part of the company and watched a previous company grow from doing, 10 million a month to doing 2.5 billion a year. So it was
Wow.
something exciting to be a part of, but really it was a passion for real estate, getting to know and understand what I was getting into when I was ready to buy a house. I wanted
Mm.
to understand, the buy side of it and all the intricacies. And through that channel and avenue, I ended up landing with a lending company, a mortgage company, where I really grew to know what the business was, how to help investors, and a large part of it, I had to be educated on what it was,
Mm-hmm.
which I've now been in the industry for quite some time. I found a lot of success doing it, and I think the best part about it is helping people. And so,
Mm-hmm.
CV3 Financial, we are approaching our 1 year anniversary,
Mm.
and there's a story and a history to how and why we launched and who we were. We used to be a different company,
Okay.
but that's a whole separate conversation itself.
Okay.
But when we launched almost a year ago to date, we were about 175 people strong.
Wow.
And so we have an incredible team of people, the best leadership in the game, and it's a place that I think we are all extremely proud of. So it's really fun to be in the lending world and to be able to
Mm-hmm.
help others find success through investing.
Absolutely. So it really sounds like CV3 is made up of people that are passionate about real estate, but also helping others as well, which is just the perfect combination.
Yeah, absolutely. The company, they are people first, right?
Mm-hmm.
All about us and how can we be happy? How can we be comfortable? But at the same time, it's also being able to provide a product to the people, right? Making
Mm-hmm.
sure that we are taking care of them and helping them, and really being not just a lender, but a mentor, right? Somebody who can guide, somebody who can
Mm-hmm.
educate, somebody who could make you feel comfortable that what you are doing is authentic, real, and legitimate. So, start to finish, top to bottom, that's what this company is made of.
Mm. I will be honest, and this isn't just a shameless plug because you are here. I have worked with a lot of lenders, a lot since I've been doing this. You guys are very different and unique, and I love it. I have yet, I mean, you're vice president of sales, and with every client you've gotten on a call with me, you've talked me through the deal. You got on a call with the client the other day and talked them through it, and it's a very unique approach. But I've really, it's gone a long way. I really appreciate it because it makes me feel like you guys really are solid in the deals that you fund. We're not going to get to the closing table and you're suddenly going to say, "Oh, we finally looked into this and it's not a good deal." It's a unique approach. I mean, I know you're used to what you do, so you don't notice it, but it really stands out, and it's very much appreciated.
Thank you for that. I think
Yeah.
you and I are partners, right?
Mm-hmm.
Other brokers that I work with, I'm partners with them. And then we work direct with, clients too. And
Mm-hmm.
it's at the end of the day, we're all a team, right?
Mm-hmm.
And when you and I work together, I respect our boundaries and the relationship that you have with your client, but we're all rowing the boat in the same direction with one
Mm-hmm.
common goal in mind. And if it requires jumping on a call to talk things through and identify timelines and the advantages and what we need to do to be able to get to that end goal, like, let's do it. I'm all about it.
Mm-hmm.
Again, we are a team, and how can we simplify and make the client experience the best possible?
Mm-hmm. Absolutely. Well, and I think too, when it comes to, talked about client experience, our world is a different world. And sometimes I find these investors come in and we start talking about bridge loans and all these different things, and they're lost. They're like, what does that even mean? And I will embarrass myself here, Justin, but I'm going to tell you, when I had always been used to the traditional world. I don't have a finance background. I never lie about that. And when we started doing real estate lending, I was thrown into it. And I was listening to all these calls and I kept hearing people talking about bridge loans. And I'm like, I would get off the phone and I would tell my husband, gosh, why are all these people building bridges? Like, I thought that's what a bridge loan was. And obviously, I've come a long way since then. I was grateful I worked with some great brokers in the beginning, and I would just bug the heck out of them. After every phone call, I'd ask them, what on earth what's a cap rate? What is a bridge loan? But at first I didn't know. It's totally different lingo than you're used to. So
Totally, totally. And I think especially in our world, the investor side of things, the bridge
mhm.
term itself is completely different than a traditional bank. Bridge is in
Correct.
a traditional world is selling my personal primary residence to buy a new one, and I need a
Mhm.
loan to bridge that gap. For us, bridge is simply just short-term financing,
Correct.
a 1 or 2 year term. So yeah, but a lot of learning in this space for sure.
Mhm. And speaking of learning, criteria is different in our world than traditional. So if you don't mind, would you kind of talk about, what factors do you consider when deciding whether to fund a real estate deal or not? And are there specific criteria that are more important than others?
Yeah, absolutely. It's a great question. And I think for those who are used to traditional financing, it's
Mm-hmm.
kind of a breath of fresh air when you hear what I have to say, the documentation that we require and how we look at the world, it's entirely different. For us in this space, it's speed, it's leverage, and it is, a very minimal documentation, right?
Mm-hmm.
Like when we are sizing up a deal, we are an asset-based lender. So we're looking at the property. What is it worth now? What is it going to be worth in the future if you're doing renovations? We get appraisals, we kind of QC those to make sure that everything looks good, right? But at the end of the day, we're doing a loan on the property,
Mm-hmm.
and we're matching it up against you as a borrower. What's your investment experience? And again, we don't have a requirement for
Mm-hmm.
experience. What's your credit score? Oftentimes in the traditional world, you have to be of a certain FICO. You have to have a certain FICO. Otherwise, you can't qualify. They look at DTI, they look at tax returns, they look at income statements, they look at 12 months of trailing history for X, Y, and Z. They want to know your blood type and your
Mm-hmm.
firstborn and everything
Yes.
underneath the sun, right? But for
Yes.
us, it is what's the property worth? What's your investment plan and what's your exit strategy? And do you have enough money to qualify?
Hmm.
And really, from like a documentation standpoint, since we're not collecting all of that, it's 2 months of your most recent bank statements. Everything we do is stated income, so we're not going to actually verify any of that stuff. We want a copy of your ID, your entity documents, and a purchase contract. And if you're doing renovations, a rehab budget, but that's it. We keep it simple because our goal is to identify what is this worth? Can you execute on your strategy and can you pay us back? That's kind of the mindset from the lender's perspective.
It's painfully simple, but just to make sure our listeners are hearing this correctly, in your world, you're not going to ask for tax returns.
We do not. We do not. No tax returns.
That's a beautiful feeling because that's the toughest part.
Yeah. And
Absolutely.
look, the truth is, you know, tax returns, while they do show a history of X, Y, and Z, we work with some of the most qualified borrowers there are. Some people who can qualify for conventional. They have an 800 FICO, they have great liquidity, they
Mhm.
have a low DTI, but there's a need and a means for using this type of financing. Oftentimes it's speed and leverage. Sometimes it's documentation, right? And we work with a lot of realtors sometimes who don't have 2 years of tax returns, and
Mhm.
so there's an advantage and a benefit to this type of financing. And back to your point, No, we do not require tax returns.
Wow. Yeah,
Yes.
that was one of the best parts because I think that's the part most people are so amazed at is their personal financials are not evaluated for the worthiness of the loan. And that's the way it should be. I mean, it's what I make in my own income is not going to help determine if that fix and flip is a good deal or not. It
Yeah,
just
right.
one.
And I think the truth is it's just kind of a snapshot in time, right? Like
Mm-hmm.
right now, this is what we have, this is what we know, and this is how we're going to qualify you, right? If I'm
Mm-hmm.
looking at 3 years down the road after your, or 5 years down after your 5/1 arm, starts to adjust, and are you going to be able to qualify it? It's a snapshot in time where we're at now, right?
Mm-hmm.
And so we look at the world through a different lens.
Absolutely. I love that lens. And just to really spell it out, because I know you mentioned speed and simplicity. If you had to say exactly for both beginners and experienced investors, what are the key advantages of working with a private lender as opposed to working with the traditional bank?
Often the advantages come with speed.
Mm-hmm.
They come with leverage. They come with minimal documentation. The timeline to be able to close is generally around 2 to 3 weeks, right? There's
Jeez.
some variables in there, but
Mm-hmm.
it's not 45 days. Interest rates right now, our rates are actually really competitive to bank rates, especially our 30-year DSCR or our 5/6 arm. Um, but I think it's an easier process from
Mm-hmm.
start to finish. What we require up front, we do all the heavy lifting. We'll work
Mm-hmm.
with your insurance company. We'll work with your escrow. Any relationships that you have, we will work with directly, right? But we do all the heavy lifting where you give us what we need up front, and then we'll just run with it. And along the way, we might need some stuff, but we try and keep it simple, which I know
Mm-hmm.
the traditional financing can sometimes become cumbersome and
Oh,
daunting, and we want to
absolutely.
avoid that process.
Well, and I think along that point, the things you request, they actually make sense. Like when I'm working with clients, I don't feel bad giving them, here's what we need. With traditional lending, sometimes you look at those lists and you're like, how does something I did 6 years ago have any relevance to me today? It just makes no sense. So I really appreciate that. But I want to circle back a moment because we brought up rates. Many times when I say we work with private lenders, I instantly get this, oh, that's going to be so expensive. The rates are atrocious. You're just highway robbery. Let's dive into that because you said they're competitive. What are we looking at with rates right now, and kind of give us some examples.
Um, Rates are a moving target right now. We've
Mm-hmm.
seen a lot of movement with the 10-year and how the Fed has come out with different announcements, and we're seeing highs and a lot of painful times where the
Mm-hmm.
rates were, in the nines for a 30-year fixed. They've come down quite a bit. I mean, where our rates are now, we can get as low as 6.5%,
Wow.
which in this environment, it is very strong. It's very competitive. As far as the traditional financing goes right now, I'm not exactly sure where rates are. I have a friend who just bought a primary, and I think their rate was around 6.25.
Mm-hmm.
So it's a matter of do you want a headache or do you not want a headache type of thing, right? I think one of the big things with rate, though, that is often overlooked is the ability to close, right? If I'm buying a home, whether it's a primary home, an investment home, I want to know that the person I'm talking to on the other end of the phone is going to be able to get this done. I want that assurance. I want that confidence. I'll pay a quarter point higher. I'll pay a half a
Absolutely.
point higher in rate if I know that I'm going to be able to gain ownership of this property, and especially in an investment environment like even a fix and flip, which I can talk about those rates in a
Mm-hmm.
minute. But the certainty to close is one of the most important things. The communication from that person that you're working with, to be able to get somebody on a phone and get answers and get responses and ask questions. And you really try to understand what things look like from start to finish, and
Mm-hmm.
any concerns or hurdles or red flags is so important. And while rates, they do matter, right? Because at the end
Of
of the day, it's
course.
money, and that's what we're all working for. I think at the end of the day, it's also, can I close, right?
Mm-hmm.
And will this lender be able to close? Which, I'd like to think that we take pride in that through over communication, a lot
Mm-hmm.
of upfront due diligence, and our team just looking at the file from start to finish. So rates, back to it, are very competitive right now, at least in the rental space. And from a bridge perspective, that short-term financing, if you will, those rates can be as low as a 999 on purchase side of things, and depending on the type of transaction, whether it's a refinance of a rate and term or a cash out, they can go into the tens, maybe 11s. But I think the when people hear that, and you hear a 10 to, let's call it 12%, if we're just rounding to the 0.01%, it's like, it's scary. But they're short-term financing, and the goal is
Correct.
to exit the loan as quickly as you can, right? Sometimes you can't qualify for traditional financing or lower financing, so it's an option. And on a fix and flip, it's get in and get out.
Mm-hmm. Absolutely. No, and I appreciated you clarifying that, because that's where people get that hiccup, is they hear those high rates, but they keep forgetting it's short term. It's get in, get out, it's interest only. Let's just get the deal done.
Yes.
So absolutely agree.
Sorry, one more thing I was going to say. If you think about how quick we're able to close, call it 2 to 3 weeks relative to 45 days, 30 to 60 days, we'll say, for traditional financing. Time is money, right? So if you can get into a property 2, 3 weeks before you can actually close with, call it a conventional loan, then that gives you a head start on being able to
Absolutely.
actually get into the property and do your renovations and get it on the market so that you can list it. And so although you're paying more, you're also getting into the property sooner, and you're able to exit that property sooner. And I think you made a good point by saying our bridge loans are interest only. So you're not paying principal on that. And I think a mindset is, let's get in and let's get out.
Absolutely. No, I love bridge loans. Now that I know they're not for bridges, I love bridge loans. So I am actually going to bring up a point with bridge loans for just a moment. So typically, in my experience, a lot of bridge loans are used when someone's going to be rehabbing for a fix and flip. However, I have seen investors using bridge loans in other instances. So I'd love to hear from you. Is a bridge loan ever, something you recommend for clients, even if it's not a fix and flip?
Absolutely. We see it all the time. And if I wish I had a breakdown of what our actually loans closed in the book of business looks like relative
Mm,
to how many DSCR loans, how many bridge loans, how many bridge with renovation. And I do have all that data, just not at my fingertips at the moment.
okay.
But the fix and flip or the renovation loan is something that is prevalent in this market space, something we know, something we do all the time. But we also get inquiries for standard bridge loans. Hey, I need a quick close, right? I don't have time to get traditional financing and a 30-day close. I need to close in 14 days. And oftentimes those are bridge to conventional loans. We don't have a prepayment period on our 1 year term. So you get in and you can refinance immediately out, right? We see a lot of bridge loans where somebody may have just renovated the property and now it's listed for sale. In this environment, properties are sitting on the market a little bit longer, with the rates being a little bit higher than I think what everybody was used to a long time ago. And so, what people are doing is they're really leveraging their position, tapping into their equity while the property's sitting on the market. We can pull money out so that you can continue to go do what you want in the investment realm while it sits on the market. And so, there are different avenues and reasons to utilize bridge financing that doesn't involve rehab. And so um, we do see it quite a bit. We really do. I'm going to try and see if I can pull something up in the.
No, I think it's great. I really appreciated hearing that perspective from you, because I think people get so stuck in thinking it's just for fix and flips, and there really is a lot of other uses for it. You just have to understand it, and then it makes a lot of sense. So absolutely.
Yep, absolutely.
I mean, all of this, I know there's some people that probably are thinking, oh, this all sounds too good to be true, but I'm curious from your point of view, are there any common challenges you face in the private lending world?
Yeah, I think there definitely are, right? If I didn't say that, I think I wouldn't be being honest. like anything, there's going to be challenges that you run into.
Hmm.
Oftentimes, many of those challenges are third party dependent.
Right.
Some of those challenges are sometimes speed.
Yep.
I had mentioned that in this world, you got to close quickly, right? And so if there's a delay with an appraisal, if there's a delay with getting title work, if it's the end of month and everybody wants to close their loan, right? There's that pressure up against time, which makes it hard
Hmm.
sometimes. Other times, what I try to do and we try to do on our end when we're looking at a deal is we analyze it based on what we know, right? And so things come up in the process down the road that you might not have known about. Something comes
Hmm.
from title, or we pull credit and, somebody told us they had a 720 and now all of a sudden they have a 630, right? That's a little change in the process, and still we would have a path forward even at that lower FICO score. But you don't know what you don't know.
Right.
Right. And so providing that confidence up front, I think, is the most important part. But there is
Hmm.
that caveat that, we're going to run credit. We got to get the title report. We got to get the appraisal back. Do all the numbers pencil out? So oftentimes you're running up against the pressure of time, and the things that you really don't know, from like a borrower perspective. But
Absolutely.
I think transparency is one of the most important things in
Hmm.
this, because if we're going to be able to execute, tell me everything up front.
Right.
Tell you everything up front so that we can feel confident going into this.
Hmm.
You know, I think those are probably two of the biggest challenges
Hmm.
in this space, but so much of the time spent up front is to mitigate these challenges and
Absolutely.
identify them, and then really put it back on them. Hey,
Hmm.
it might not take 2 weeks to close this one. It's going to be 2.5, right? I'm just getting this out there, that type of
Hmm.
thing, right? Do you want to move forward? So I think so long as you're communicating clearly with everything, uh, and doing a lot of the upfront due diligence, it mitigates a lot of the challenges.
Absolutely. Well, and I think you brought up a good point, and it's hard. In my industry, I deal with this constantly, not just real estate, but you are relying on a third party for the success of it. And so it is challenging. I've had many deals take a lot longer because of insurance or title, and it's been very rarely a lender issue. It's always that third party. And that it is hard to rely on have a third party because you can only control yourself and what your team does. You can't control them, and that's a hard part of our industry. I'll be honest with you; it's frustrating.
Yeah,
But
it really is. And oftentimes it looks like a reflection of you,
yes,
regardless of how much
I
control you
know, I
have over the
know.
situation.
Hmm.
Right. And so, yes, it is one of the frustrating or challenging parts for sure.
It is. I often have to remind myself, because I don't lend any of the money. Everything I do is all third party, and so I'm always feeling like if something doesn't work out, it's a total reflection of me. And it's hard. I have to have I have a mantra a lot of the times, like, you can only control yourself, Sarah. You cannot control the outcome. But it's hard. It is I am a control person, and so letting go of that on a daily basis, it is just I gotta say, I think it's the hardest part about what I do, but
Oh,
yeah.
definitely. And I will
Mm-hmm.
say this industry is built on relationships,
Mm-hmm.
right? And so it takes time to foster and build that trust and that partnership aspect, or mindset, right? And so if you're not able to deliver for some reason that's outside of your control, or you have experienced frustration from
Mm-hmm.
somebody, it feels like a reflection of you, and
It
like you've let
does.
that person down, and everything is relationship driven. So
Absolutely.
the idea is let's do this together.
Well, and you brought up relationships, my favorite topic, and I love, when I see relationships being built with lenders and investors. What advice would you give to investors that are looking to build a strong long-term relationship with a private lender?
I think it's imperative to know who your lender is, right?
Mm.
Meet somebody, talk to them, get on a call with them, understand who they are, what their background is, what they're capable of doing, what they're
Mm-hmm.
not capable of doing. So much of it is really like an interview, right? Tell me
Mm.
more about what you do. because I think there needs to be a level of comfort, and not every lender is going to be for every person,
Right.
right? The things that CV3 does, I think we do exceptionally well. There's other lenders who do similar things. There are other lenders who do different things, right?
Mm-hmm.
But at the end of the day, it comes down to what I'd mentioned earlier, which is I think the ability to execute and close.
Mm-hmm.
So read reviews, talk with others who may have had experience with this lender to see what kind of feedback they have. I will say though, at the same time, it's also up to the lender to talk to them too, right?
Mm-hmm.
Tell me more about yourself. Tell me more about your experience. Tell me more about where you are now, what you want to do in 6 months, what you want to do in 12 months, right? How can I be a good partner to you? Because I think if you have this conversation and understanding upfront about here are my goals, and then I tell you here's what we can do, if it aligns, it should be, the roots or the foundation for kind of the growth of
Mm-hmm.
a lender and borrower relationship.
Absolutely. Yep, relationship is key. Absolutely key. Well, Justin, I know I don't want to take up your whole day. I know we got to wrap this up pretty quick, but I have one last question. I deal with a lot of people that are, beginning or on the fence considering real estate investing. If you were to give some advice to people that are on the fence, they're interested in real estate investing, but they just haven't dove in head first. What would you tell them to kind of get them over that hump and get them to do it?
It's a great question. I mean, the first thing that comes to mind is go for it,
Mm.
right? You get one opportunity. Um, but put everything together. If you're gonna go head first, right? Know who your team is.
Mm.
Know who your lender is. Know who your general contractor is. Know who your realtor is. Know who your broker is. Know everything about that. So that way, when you do dive in head first, you have the team, you have all the pieces in place. And a lot of it is going to be putting it together. You might think that
Mm-hmm.
you have everything, but I think if you have that foundation and that trust in that group or network of people, then you're going to find success. So I kind of operate in that positive mindset. I'm an eternal optimist, and if I feel that I'm going to do it, I'm just going to do it, whether or not I have experience. But I'm going to learn, and I'm going to make sure that I cross my T's, I dot my I's, and I'm maybe a little bit more analytical up front than I would be. But really, I think leaning into your network, the people that you know and trust, those that you listen to where you feel a connection to them, leverage those relationships, because I think if you can get that confidence through other people's experience, then you're going to find success.
Mm. Absolutely. I couldn't agree more. Thank you. And
Of course.
wait, I mean, if you're willing, we're going to have to do another session because I feel like we just
I'm ready.
scratched the surface. But
Yes.
I just
Round two coming up.
round two, we'll dive deeper. But I really appreciate you taking the time today, Justin. I love working with you. I love your team. I love your company. I think you guys have this figured out. But I just appreciate you sharing this with the world today. And hopefully, everybody got a little insight. And for people that have been on the fence about real estate investing, I hope this gave you that confidence that you needed to realize it's not as scary as you might think it is. You just, like Justin said, you just have to find the right team and go from there. And we're here to support you. And Justin, thank you so much. I appreciate your time today, and I thank all of you for listening. And until next time.